Hey, did you know you can withdraw from your TFSA anytime without any penalties?
Wait, seriously? I thought there were some strings attached.
Yeah, seriously. You can
Wow.
take money out whenever you want, and it's all tax-free.
That's amazing. But, is there anything I need to be careful about?
Well, there's one key rule.
Okay,
The amount you withdraw gets added back to your contribution room, but not until the next calendar year.
oh, so I can't just put it back in the same year?
Exactly. If you
Right.
recontribute in the same year without extra room, you might overcontribute and face a 1% penalty per month on the excess.
Yikes, that's something I definitely want to avoid.
Yeah, it's like trying to squeeze more clothes into a suitcase that's already full.
Haha,
It just doesn't
exactly.
work, and you might end up paying for it.
So, if I withdraw 5,000 in 2024, I need to wait until 2025 to recontribute that amount?
You got it? In
Gotcha.
2025, that $5,000 gets added back to your contribution room.
Makes sense. So planning ahead is crucial.
Absolutely. And speaking of planning, have you thought about what happens to your TFSA if you move abroad?
Actually, I haven't. What happens then?
Well, if you leave Canada, you can keep your TFSA open and your investments will still grow tax-free.
Oh, that's
But you
good.
can't make new contributions once you become a non-resident.
I see. Are there penalties if I do contribute while abroad?
Yes, unfortunately,
Ah.
you'll face a penalty of 1% per month on the amounts contributed while non-resident.
That's steep, so it's better to avoid contributing until I'm back?
Exactly. And if you're leaving permanently, it might be wise to withdraw your funds and close your TFSA before moving.
That makes sense. Better safe than sorry.
Definitely. Oh, and did you know you can inherit a TFSA?
Really? How does that work?
Well, if you name your spouse or common law partner as a successor holder, they inherit your TFSA completely tax-free without affecting their own contribution.
That's
room.
great. What if I want to leave it to someone else, like my kids?
You can name them as beneficiaries. They'll receive the money tax-free, but it won't remain inside a TFSA.
I see.
So it won't continue growing tax-free for them.
Gotcha. So the TFSA is closed and they just get the funds?
Exactly. And remember, you can have multiple beneficiaries if you want to split it among several people.
That's useful. I should probably update my beneficiary information.
Absolutely.
Yeah.
It's important to keep your beneficiary info up to date with your bank.
I'll make sure to do that. Now, here's a question. Should I be maxing out my TFSA every year?
Well, that depends on your situation.
How
If
so?
you have extra savings, want tax-free growth, and are investing for the long term, then maxing it out is a great idea.
But what if I have other financial priorities?
Then you might want to reconsider. For
Right.
instance, if you have high interest debt, it's usually better to pay that off first.
Makes sense. No point investing at 5% if I'm paying 20% on a credit card.
Exactly. And if you might need the cash soon, remember that while TFSAs are flexible, withdrawing means you'll have to wait until next year to regain that contribution room.
So I should think carefully about my liquidity needs.
Precisely. It's about balancing your short-term needs with your long-term goals.
That helps a lot. Now, I've been eyeing some US stocks. Should I hold them in my TFSA?
Well, there's a bit to consider there.
Okay,
US stocks can grow tax-free in your TFSA, so you won't pay capital gains tax.
that's good news.
It is. However,
Yeah.
US dividends are subject to a 15% withholding tax, even in a TFSA.
Why is that?
Because the US doesn't recognize the TFSA as a retirement account for treaty purposes.
Oh,
So unlike the RRSP, the TFSA doesn't get that tax treaty protection.
so I'd lose 15% of any dividends?
Exactly. So if you're investing for dividends, it might not be ideal, but if you're aiming for growth stocks, it can still be advantageous.
That makes sense. So for dividend stocks, maybe I should use my RRSP instead?
That's a smart strategy. The RRSP does have the tax treaty benefits, so US dividends can be received without withholding tax in that account.
Good to know. Thanks for the tip.
Anytime. And speaking of tips, let's tackle some common TFSA myths.
Oh, this should be interesting. Isn't that the case?
Not at all. You can
Really?
invest in a variety of products like stocks, ETFs, bonds, and more within a TFSA.
So it's not just a savings account?
Exactly. It's like a basket where you can hold different types of investments, all growing tax-free.
That's a game changer. What's another myth? Wait, you don't?
Nope.
Wow.
Unused contribution room carries forward indefinitely, so you can catch up later if you haven't maxed out in prior years.
That's reassuring. I was worried I missed out. They don't?
Actually, they do.
Oh,
When you withdraw funds, you can't recontribute that amount until the next calendar year, unless you have additional contribution room.
so if I'm not careful, I could accidentally overcontribute?
Exactly. It's important to track your contributions and withdrawals to avoid penalties.
Got it. What's the last myth? Well, they don't, right?
Correct. All gains inside a TFSA are completely tax-free.
Good to know. But doesn't the government sometimes tax TFSAs if you're too aggressive?
Well, if you're actively trading in your TFSA, like a day trader, the CRA might consider it business income, which is taxable.
That's
but
what
for
I was
regular
thinking
investing, you should be fine.
So, as long as I'm not flipping stocks daily, I don't need to worry?
Exactly. But it's always a good idea to stay informed and perhaps consult a tax professional if you're unsure.
I'll keep that in mind. Hey, earlier when you said it's better to withdraw and close the TFSA before moving abroad permanently, isn't it sometimes better to keep it open? What if I plan to return to Canada someday?
That's a fair point. If you might return, keeping your TFSA open allows your investments to continue growing tax-free.
So it really depends on individual circumstances?
Absolutely. It's
Right.
important to consider your long-term plans and perhaps get personalized advice.
Thanks for clarifying. You know, the more we talk, the more I realize there's so much to know about TFSAs.
You're not alone.
Haha.
TFSAs are a fantastic tool, but understanding the rules helps you maximize their benefits.
Definitely. I feel much more confident now.
That's great to hear. Remember,
Yeah.
staying informed is key to making smart financial decisions.
Absolutely. Thanks for all the insights.
Anytime. Let's keep the conversation going. Financial literacy is so important.